Good day, everybody. Welcome to my course on secret stock market strategy. Earn continuous income by risking only rupees 500. Yes, you got me right. In this strategy, I will show you how to select your stocks so that your maximum risk at any time will be only rupees 500. The main points that I will cover in this course are: first is objective of the course, then who is this course for, means who can take this course or who can attend this course, who are the ideal professionals to enroll for this course, then various types of financial products, what are the different types of financial products from where we can earn money or generate revenue, then what is stock market and why stock market. Then we will learn that what is stock market and why we should invest in stock market, what are the basic reasons. Then a brief about fundamental analysis and technical analysis. Even though this is basically not required, but as we will be doing this strategy based on technical analysis, so it is better if we learn a short brief about fundamental analysis and technical analysis. In the next module, we will be learning the actual strategy that we will be applying, and then explanation of the strategy and backtesting. In this section, I will give some examples to show how the mentioned strategy in earlier module is working, how much profit you can generate if you in a disciplined way you follow the strategy, and the results. And finally, I will show you how to use pyramiding so that you can increase your profit percentage by a huge extent. Means after certain period of time you can buy the same stock if our criteria are fulfilled, and then you can increase your amount of earning, but at that time also your risk will be only rupees 500 rupees. So course objective. So whenever we hear the term stock market, a good thinking comes into our mind that it is risky. Yes, it is risky only if we are not aware of the stock market, we are not aware of our investment, and we blindly, without following any strategy, we invest. So during that time, in most of the time, people make losses. But this course will provide a simple strategy based on technical analysis, using which you can earn lifetime continuous earning by risking only rupees 500. So at any point of time, your risk will be only rupees 500 rupees. As it is a stock market, we have to take some risk. So we are defining the risk that it will be maximum 500 rupees. Means it is negligible amount. You know that if you go for a lunch or dinner in any restaurant, it costs more than that. So that much risk only we will be taking, and I will be showing you how much you can earn by risking this much amount. I will explain the steps in such a simple language that even the beginners can understand it. However, if anyone has basic stock market knowledge, it will be an added advantage. Towards the end of this course, I will explain how you can do pyramiding to increase your earning further. Note that during that time also your maximum risk will be rupees 500. Even though I will be explaining the details taking reference to the Indian stock market, this strategy is applicable to any stock market, but in that case you have to define your risk limit. Means for other markets the risk you can define by your own. Once you learn and understand the strategy, you will be knowing how to define your risk. Even you can apply this strategy for cryptocurrencies or forex investing as well. Note that this strategy is for short term. Buying and selling will be based on the strategy parameters that I will be explaining. So this is for short term investing, not for daily trading or intraday trading. Overall, the course will answer the following 3 basic questions of stock market investing that everyone faces. Means whenever someone jumps into the stock market, the most basic three questions he asks or has come into his mind, that where to invest, means which stock to select for investment or buying, then how much to invest, what is the amount that one should be investing, and when to exit the stock selling. So for me also it happened that I bought a stock, it went up to 15 or 20%, and then I did not sold it during that time. Then again now or after some time it becomes 20% down or 30% down. So stock selling is also important. Without selling or without taking the profit, we may eventually incur losses. So these three basic parameters, means where to invest, how much to invest, and when to exit, will be answered in this course. Now who should attend this course? The course will cover the contents that are beneficial for any professional who wishes to earn from Indian stock market. Then professionals from any background who can risk only rupees 500 to grow their invested money. Note that the risk is only rupees 500, the advanced investment amount is more than that. Any beginner or expert stock market professionals who are not getting their expected results with their current strategies. So all these professionals can attend this course. Now, types of financial products. So what are the available financial products? There are many types of financial products that an individual can invest in to earn money. So I will give some of the common examples. Here are some of the most common ones. First is stocks. So as we are talking about stock market strategy, so we will be buying or selling stocks. So when you buy stocks, you are essentially buying ownership in a company. You can earn money from stocks through dividends, a share of the company's profits paid out to shareholders, and capital gains. Means for example, if you buy a stock at rupees 10, then after some time it becomes rupees 15, so 5 rupees is your profit or capital gain amount, the increase in the value of the stock over time, that is called capital gain. Again, if company made some profit, they declare dividends at different time, so that dividend income is also achieved by investing in stocks. Then bonds. When you buy a bond, you are essentially loaning money to a company or government. The issuer of the bond pays you interest on your loan, which is how you earn money from a bond. Then forex market, that is currency market. You can earn by trading or investing in the forex market or currency market. Then mutual funds. A mutual fund is a type of investment vehicle that pools money from many investors to buy a portfolio of stocks, bonds, or other assets. You earn money from mutual funds through capital gains and dividends. So here also the mode of earning is through capital gain and dividend. Then exchange traded funds, or in short these are known as ETFs. ETFs are similar to mutual funds, but they trade like stocks on an exchange. So you can buy those from exchange like BSE, NSE, this type of exchanges. You can earn money from ETFs through capital gains and dividends. Then cryptocurrencies, NFTs. This cryptocurrency and NFTs, these are the newest additions to the financial products, and they are normally more volatile or more risky as compared to stock market. Then real estate. Investing in real estate can be a good way to earn money through rental income and capital appreciation. Capital appreciation means the increase in the value of the property over time. Then certificate of deposits or CDs. CDs are also a type of savings account that offer a fixed interest rate for a set period of time. You earn money from CDs through interest payments. Then commodity market. Commodities are raw materials or primary agricultural products that can be bought and sold, such as gold, oil, wheat. You can earn money from commodities through capital gains and dividends. Now what is stock market? The stock market, so as the name market is there, so it is a market, means where things can be exchanged or sold or bought. So the stock market refers to the collection of markets and exchanges where stocks, these are also known as shares or equity, of publicly traded companies are bought and sold. So that is called a stock market. It is a platform for investors to buy ownership of a company and earn a share of its profits and losses. The stock market is typically composed of two main sectors, the primary market and the secondary market. In the primary market, companies issue new shares of stocks in an initial public offering, or in short it is known as IPO, where the shares are sold to the investors for the first time. And then in the secondary market, investors buy and sell previously issued shares of stocks on stock exchanges like BSE, NSE, New York Stock Exchange, Nasdaq, etc. Now why stock market? So there are so many varieties of financial product. Why you should choose stock market? The stock market serves as an important barometer of the economy, reflecting investor sentiment about the overall health and future prospects of companies and industries. Investors buy and sell stocks based on a variety of factors, including company earnings, industry trends, macroeconomic conditions, and geopolitical events. Investing in the stock market can be a way to grow wealth over time. So from stock market you can grow your wealth over time, but it involves risk, including the possibility of losing money if a company's stock price falls. For example, you purchased the share of a company X at rupees 50, and after 1 month that is traded at rupees 40, and if you need money and you sell all those stocks, so you are losing rupees 10 per share. So if company stocks fall during that time, you can lose your money also. As with any investment, it's important to do your research and consult with a financial advisor before investing in the stock market. Now there are several reasons why a person may choose to invest in the stock market. These are some of the reasons: that potential for long-term growth. Historically, the stock market has provided higher returns than many other type of investments such as bonds, saving accounts. While the stock market can be volatile in the short term, over the long term it has the potential to generate significant returns. Next is diversification. Investing in stocks can help diversify an investor's portfolio, spreading their risk across a variety of companies and industries. This can help reduce the impact of any company or industry experiencing a downturn. Then poor fixed deposit returns. Bank FDs are providing such a low interest that after tax the amount cannot even beat the inflation. Then passive income. Some stocks pay dividends, which are a share of the company's profits paid out to shareholders. These dividend payments can provide a source of passive income for investors. Then inflation protection. Historically, stocks have been able to keep up with the inflation, meaning that investing in the stock market can help protect against the erosion of purchasing power over time. Then ownership in companies. When you invest in the stock market, you become a part owner of the companies you invest in. This can provide a sense of ownership and participation in the success of the company. Then retirement savings. Investing in stocks can be a way to save for retirement of a person. So that's all for this module. Thank you. Happy learning.